office space. You have 6.8 million square of office space, 6.8 million square feet of office space. I go through any town, USA, any office yard, you're going to see the sign stuck in the grass outside, X number of square feet for rent here. Mm-hmm. What's your portfolio look like in terms of occupancy rates, that kind of thing?
Yeah, our occupancy is trailing up at close to 90% last quarter.
Really?
And it has defied gravity and really defied the national headlines of doom and gloom.
Why is that, do you think?
You know, we, during the pandemic, saw the migration of a lot of really smart, well-educated workers coming from the coast,
Yep.
leaving higher crime, leaving higher taxes,
Yep.
chasing quality of life, chasing affordability. And now we're seeing companies chase those employees. And we're seeing those companies come in from those big cities into places like the Woodlands, where we filled up over the past 2 years almost 750,000 square feet.
Interesting. So where is your office space today versus maybe pre-pandemic in terms of vacant occupancy and rate and that kind of thing?
I would say vacancy is a tick higher. We were about 92% pre-pandemic. Rates are almost identical.
Really?
Yes.
Interesting, because I mean, you know, the story in cities like New York City, for example, you know, the story here is if you're in an A office space like Bloomberg's headquarters, you're fine.
Right.
If you're in anything else, good luck.
Tough sledding,
Yes.
no doubt. But in a community like the Woodlands,
Yep.
we control the development of all new product. So we're only building to meet supply. There aren't 4 folks with a shovel in the ground all at the same time rushing to be first and the other 3 lose. So by controlling the supply side of the equation, we were able to mitigate some of those bigger swings that are typically associated with the office market.
6,000 multifamily units. Where are those units, generally speaking, and how's that business doing?
The business is incredible. We've seen great same-store growth year over year. And a big picture, we have a 3 million plus housing unit shortfall across the country, and
Yeah.
multifamily is trying to address some of that, especially
Yep.
from an affordability perspective. Our portfolio in the Woodlands remains high 90s, rents increasing year over year. Same with our portfolio in Columbia and Summerlin outside of Las Vegas.
I love Summerlin. Another great golf course there in Summerlin. All those courses out there. How is Vegas doing generally? Because that's one of those markets up and down. It's kind of the poster child for when things are great, poster child when things are bad. Where are we now in that cycle for Vegas?
Vegas is in a really good spot right now. You know, we're selling over 1,000 homes in Summerlin this year and last year. We hit record home sales. First quarter, we were up 24%. Builders are buying land from us at a record price per acre, and we're, you know, kind of the catcher's mitt of all those residents looking for quality of life.
All right, you've got a land bank. I'm not a real estate guy, so I don't know what a land bank is. I'm guessing you guys own 35,000 acres in a land bank.
All right.
What do you do with that
Yep.
stuff? Do you develop it or you sell it? What do
We
you
play
have for it?
SimCity. We put in the roads, we put in the hospitals,
Okay.
police, fire stations, wastewater treatment plants, and then we grade land and sell it to home builders who build homes. Residents move in. They need commercial amenities, places to shop, office buildings to work. We build those with the cash from selling land to home builders and create these communities like Summerlin. Sometimes we build golf courses.
Right, exactly. The TPC Summerlin, I've lost a lot of golf balls in that desert. What's next? What's the growth for your company here? I'm looking at just on the Bloomberg terminal here. Here's your company, folks. You got a market cap of about $3.7 billion. This company's got revenue, about just right around $1 billion. $1.2 billion is the forecast for 2024. EBITDA, which is what I look at, actually you guys are a real estate company, so operating income $300 million. So this is a real size company, some heft. You got about $5 billion of debt on your balance sheet. Where's the growth going forward?
It's across all of our communities. Our job is to transform that raw land, that land bank, as you referred to it, into income-producing assets by meeting the demands in our community. And like I said, across our portfolio, our multifamily is very tight, high 90s occupancy. We need to build more. So we're moving very quickly to start that next multifamily project in the Woodlands and the next one in Summerlin to meet the demand that's in that community.
So it's better to stay, I guess your strategy is to take your existing communities, the Woodlands outside of Houston, Summerlin in Vegas, and expand those as opposed to saying I'm going to Phoenix or something.
Well, it's funny you should say that. 2 years ago, we went to Phoenix and bought 37,000 acres in a community called Terra Vallis. We're entitled for 300,000 residents and 55 million square feet of commercial space, roughly the size of St. Louis. We've already under contract and sold over 800 lots to home builders at over $700,000 an acre to meet the housing demand that exists in the West Valley of Phoenix.
So who builds the homes? Do you build the homes or do you go to D.H. Horton or Toll Brothers or one of those guys?
We sell to all the public builders, a lot of large regional private builders as well. We try to be Switzerland, sell land to whoever bids highest and delivers the best product.